Howdy, guys. Thomas Talbert with Prime Properties here to do the 78731 zip code leasing update over the past year. I will go over the stats on the MLS, and then I'm actually going to pull up all the leases that we saw uh, in 2025 and early this year. And we'll go over where are these pockets of rentals and where you can shine if you're a someone who's trying to rent in this zip code. Where are all the rentals? How can you beat them? And of course, what rent rates you should be expecting. First off, going into these statistics here, we have a median list price and an average lease price for this neighborhood that has increased over the calendar year. That is very odd, given that the prior year we have seen a 20% decrease in the Austin market as a whole, by about 20%. So what is it about this zip code that is keeping these rent rates relatively high? We should be looking at the number of leases done. I'm going to make sure that we are actually looking city, county, size between. But in December, there was 33 less leases in this zip code than there were last year, and there were 16 leases. That means that last year there were somewhere in the ballpark of about 24 or something to that effect, which is not a small number. Certainly, if that is the same going into 2025. Taking a look at our graph here, this shows that there is a few different outliers that may have affected this number. There are a lot of luxury 4-bedroom homes in this zip code. That is, when you get luxury 4-bedroom leases, those numbers are always going to be really, really big in this zip code, because this zip code is really, really close to downtown. And 4 bedrooms and these houses are probably 2,500 square feet plus with luxury everything. This is where you're going to get some crazy rent rates. Let's take a look at this November 25th in the 4-bedroom market. There seems to have been a lease for $12,500, which is huge. It doesn't seem like there is a 4-bedroom in this zip code that has leased for lower than $3,650 in a long time. That just goes to show that it is misleading when you look at the rent rates and go, wow, why is this zip code increased? Well, it's because there are the 4-bedroom luxury units in this zip code are holding it up and can make up for the steady decline we've seen in rents. This sort of goes to show here, once you start getting down into 3 bedrooms and the 2 bedrooms, what you can be expecting. In the 3-bedroom market, we have seen some highs going into the 4,500s, which is still pretty darn expensive. Again, this zip code is really strong, really close to downtown. We'll look at the characteristics that sort of define this zip code, which I think lead to this. But there are strong rent rates to be had in this zip code because of its location in Austin. It's still got some of the topography of the rolling hills. It's got Mount Bunnell. And some greenbelt areas that you don't get once you start getting further up north. Going down a little bit further, we can look at the median and average rent rates going into the past couple years, and they've stayed pretty darn steady for several years now. The median rent rate, or the average rent rate, has stayed the same for a number of years now almost. You can only see a dip here starting in 2026. We're really starting to see a decrease in the prices. Asterisk next to 2026 though, because all these stats have an entire year of data to pull from. This does not. So this is sort of too new to really
take into account. But looking at this, it was at 33.55, 33.55, 33.27, and 32.59 for 4 years running. It stayed high and very stable. We're seeing the average rent rates dip a little bit, but again, that might not be the bulk of these leases that are happening. The volume of the leases, as we'll see in some other charts here, is actually in that $2,000 range, so $2,000 and less. And then it has these luxury rentals that are putting the average rent rate higher because they can. It's really, really impressive. Looking at the sales volume here, you can see that the sales volume going through 2025 was very high going into the May, June, July, August, the hot times of the year. That's exactly when you want to be putting your property on the market, and it shows by the upper end of lease values here. The average sale in June of 2025 was $4,000. That was the $4,000 worth of rent was the average sale in June. Also, there were 31 units going through. So there was more inventory being put on the market, and there was and the leases, and they were leasing quickly at a better rate. So you're getting that $2 square foot mark pretty easily. And of course, on either side, which is very much expected, you can see that the rent rates, as of last month, were only 13. We only had 13 leases go through in that zip code. We saw a big buildup of inventory go onto the market in June and July and May of 2024, meaning that there was just a bunch of properties that weren't leasing for much. And you can see it in the average rent rates over here. We were seeing $2 plus a square foot in average rent rates earlier, but in 2025. But you can see in this market, we were getting significantly less. And that is just, there was so much more inventory on the market that could not get absorbed, and people just weren't willing to rent it. Taking a look at all these stats, I sort of want to pick all these stats up and bring it over to a map of all the sales volume that happened in 2020, over the past 365 days in this zip code. You can see, and if we zoom out a little bit, it might be able to give us this metric, but there is, this is the general shape of the zip code. I'm not making it up. It is very odd. Scrolling up, this is the shape of the zip code. I tried to draw it out as best I could in our little software here, but this shows all of the properties that have leased or are currently on the market over the last 365 days, which is what that chart was that we were looking at down below. As you can see, there is some obvious discrepancies of where these leases are. This is Mopac right here. So Mopac is a main artery here in Austin. Mopac and I-35 are the main arteries of Austin that run north and south. Mopac is the luxury highway, is what I'll call it. That is where all the nicer homes and the nicer sides of town, if you are someone who's making, over 60 grand a year, you're trying to move over to this Mopac side to either rent or buy a home, because that is just where the nicer homes are. They're better locations, and there's better amenities over here. Where the east side of 35, 35 and east, that is more the working class neighborhoods. And the reason why you can get good rent protection hugging Mopac is because it's the luxury side of town. Generally speaking, the inventory over there is much better. Diving in here, you can also see that on this east side of Mopac, there is a density of all these rentals over here that you're not seeing over here in this side of the zip code. Zooming in a bit, you can see that the bulk of these are actually just north of 35th Street right here. 35th Street is another artery, just like the southern border of this zip code, and it has a lot of amenities to it. There is a really nice luxury Whole Foods that is in this shopping center right here. It's literally just outside of the zip code, but it is right here in a very nice area. There's also a big hospital and a lot of multifamily that comes along with it. And a lot of retail centers right down here and some more hospitals. So there's a concentration of doctors, of nurses, for example, that are making a lot of money and they want to live close to their to work, and so this is where they're choosing to live. The triangle rounds out the north right here, just outside of the zip code, and that's another place where it is a luxury place to live. There's some grade A apartment complexes over there, and big open areas where you can walk. It's just a very nice side of town. There are a lot of single family units that come in and are rented through here. Now, this housing stock right here that I'm looking at is older. It is very expensive to build, certainly in how this played out. This area, was probably developed in the ballpark in the 80s and 90s. This is where a lot of those new homes were in the 80s and 90s. Well, that old housing stock now is in a zip code that is crazy expensive to build, and these lots are real itty bitty, and so you can't really build a mega mansion. You don't have half acre lots to build a big house on. These lots are generally smaller, and the houses on them are older, and they're going to be expensive to not level and make your luxury homes. And now you are seeing that a little by little in these zip codes, but they are people are opting to, instead, you have all this equity in these homes, and you will instead of maybe trying to build a new house on here, you're going, you know what, it is just better if I rent it and keep the cash. And so I believe you're seeing this in all of these zip codes, and because of its proximity to all these luxury things, you're getting some high rents in the zip code. Now, will be the bread and butter. You see some 1-1s, a 1-bedroom, 1-bath, getting $1,800 a square, or $1,800 in rent for 750 square feet. That is a luxury rent rate for a 1-bed, 1-bath if I've ever seen one. Diving in here, I think I saw some. These are some condos that are renting for $4,400. This new housing stock in here that is very expensive and very nice. This is maybe even a builder came in here and built these. We are seeing some builders come through and remake some of these neighborhood, and man, these new builds and these zip codes are getting strong rents. You're seeing a lot of 3.2s that are going to be in the $3,000 range. And look, this is an old house. This property leased for $3,500, and it was 1,300 square feet. Taking a look at the photos weren't that strong. The interior is nice. They did they put down some LVP. They've painted. They probably replaced the countertops recently. They've got some sort of built-in they've redone the countertops. They have redone the cabinetry a little bit. Backsplash is really nice. This has probably been a rental house for a long time, but this is a lot of what this housing stock looks like in this zip code. And it's just so old, no one wants to move it. And it's just so expensive to build, certainly in these zip codes. And these lots are small. So for 1,300 square feet, this property listed for 3,300, but then closed at 3,500. And this is what you will see. If you dive into this, you'll see a pattern of this in this zip code. Moving across the highway a bit. This is a section of town that is even more luxurious, and I'll tell you why here in a minute. But this is actually our office is right here in this zip code, and we are surrounded right here on Far West Boulevard is an artery of this. Far West and Balcones, this area are commercial zones that have a lot of retail. They have a lot of businesses. This is where the HEB is over here. There's a Randall's down here on the southern end of right here. There are some office buildings, and this is where you'll see a lot of the multifamily or smaller or duplex operations that are built up around these arteries, right behind the commercial development. And that's what you can see going in through here. Now, this is where you're going to see some of the smaller rent rates, but I say small, these are still very strong. This area back behind, right off of Hart Lane is very there's a bunch of duplexes, a bunch of condos, and condos aren't renting well right now. And you're going to see the the southern end of rent rates sort of going through this artery right here, and as well there's condos across the street right there that you're really going to start see the lower end of the spectrum in the zip code. But going through here, these are still very strong. You're going to see a lot of things like this. This is a house that leased for $1,700. It's a 2-bedroom, 2-bath. It's tight and hasn't been updated a little bit, as you can tell. There's a lot of housing stock right here that looks like this that is older and hasn't been fixed up, but it's getting for $1,700. Right up the street, though, 3-bedroom, 3-bath, you have these properties that are leasing for $3,200. Much larger, but this is a single-family home. These duplexes, you're going to, in this zip code, per every zip code, you're going to see the lower end of the spectrum, but these are mixed in with some single-family homes that this is a nice home. Luxury by the price tag standpoint, but this is, just a very nice home. This is probably a family who lived in here who couldn't sell it for the price tag they wanted, and so they've opted to rent it out. And that's what we're looking at here, and that's a very, very nice rental. And these are mixed in here with this artery that is all duplexes, and there's certainly, when you come up here, 1,300 and 1,395. There's also a multifamily complex, several of them back in here that you will see that multifamily and condos that are going to drive down that duplex stock because there is because there's inventory that is in that 2-bedroom, 2-bed, 2-bath, 1-bed, 1-bath type inventory. And the multifamily is going to eat a lot of that up because, when you have duplexes next to multifamily properties, well, the multifamily properties are going to win almost every time unless you have a bigger family and you need a little bit more space, which a duplex can offer. But these multifamily properties, they have access to a gym, they have a pool, they have in-unit laundry, and generally because of the scale they're able to operate at, they can have cheaper rent rates and offer all those amenities. And it is a struggle to rent duplexes in markets where you are hugging some multifamily. So this is one of those where you're going to have to see the duplex inventory really step up their game to get that upper end of rents. And some of them clearly are. We're seeing some $2,500 rent rates where, if you are competing directly with this multifamily stretch right here, you need to step up what your house looks like. And so you're going to obviously see some rent rates increase going through this multifamily and duplex area, some condos. And then moving left over here, this is where 360 is a incredible. Well, I told you Mopac was was the highway for the wealthy side of town. Well, 360 is the highway for the wealthy of the wealthy. This is where you are starting to see every CEO that's in town. They live somewhere in Westlake. Anyone who is making 200 grand plus in Austin, Texas, they live west of Mopac. And if they're doing really good, they live west of 360 or right on it. And that is why I believe the zip code has held its rent rate so well, is because, man, the properties that you're going to get to see through the rolling hills, through the topography that this zip code has, they have some stunning views and some great houses to go along with that. Let's take a look at this one here, $5,200 for this home over here. And it's an older home. There has not been a lot of remodeling done, but look at this view. There is a pool in the backyard, and they've got a great view of the rolling hills. This is, Austin, Texas's version of the Hollywood Hills, but it's got a pool, a big backyard, and look at that view. You get the view of the luxury side of town, like I was saying. Again, the houses like that, saving the zip code. They haven't done a remodel in years, but they can rent it out for $5,000. They're going to do it every time. $9,000. We're starting to get on up there. This is a luxury home in this zip code that is absolutely stunning. And look at that. And again, look at that view. This houses like this are the reason why that you're starting to see the zip codes that are holding their rent rates, is because the luxury side of town is able to prop them up. If you want more rental analysis updates on zip codes, I would love to hear from you. Please let me know if you have any questions. I hope this was beneficial, and reach out if you have any questions. This is Thomas Talbert with Prime Properties, leasing specialist here in the Austin area. Thank you for your time.